Hi guys, Harry Yotis here, professional trader for 20 years now. Started my career in 2005 and still alive in 2026. So what do we have here? It's the middle of the week, Wednesday, the 29th of April, one more day till the end. We're getting window dressing. We're getting some very bad news. The big news of the day is the war, the Fed, and earnings of big tech after market. You literally had boom, 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 3 bombs dropping, pun intended, I guess. 3 bombs dropping today. Okay, we'll get to it. There's some implications there. So first, we always talk about the technical picture. Come on, guys. Bullish. We said yesterday, the whole week, we're probably going to stay at highs because of window dressing for the end of the month. And we're also starting the new month on Friday, so we're probably going to stay around the highs no matter what oil does. Okay, the market is very, very resilient despite all these minefields that we had today. Okay, so technically speaking, bullish. Let's go with the sentiment. Basically same. Still the market was slightly down. We're still at greed. Extreme greed here. Put call ratio still at fear. We've probably, because of this move higher and we're staying at the highs, it's probably alleviated a lot of the overbought conditions. Probably has the VIX has probably come down during these times. So even with the market, quote unquote, in greed, we can still have room to go higher. Okay, we're not super out of it yet. Okay, so that's good. Okay, I'm still waiting for a move higher before dropping to some kind of retest. Okay, because I can't buy right now. I'm just staying with what I have. Okay, so let's get to the main event: war, the Fed, and earnings. Okay, war. Well, you know what happened today. The big news of the day was Trump. Trump decided to, say no to to Iran's demands. He's still going to close the Strait of Hormuz. So what happened to oil? You guessed it, spiked up 8% plus. Okay, we went long yesterday. What a terrible, terrible timing that we have. We went long, we went short yesterday, and the market ripped in our face. We could have waited one day. Okay, so this, still bullish chart. Nothing has been violated. Still going higher. Thank God we went short long term. So we have some credit spreads expiring in October and January of next year. Okay, but so far this war looks like it's going to heat up before an olive branch is extended. So let's see what happens. We don't know yet. We are still sticking behind our long-term short in oil. Our loss is defined, so that's going against us. Okay, the next thing that we had on the agenda was the Fed. Okay, so the big news is Fed hold rates steady, but with the highest level of dissent since 1992. So 4 members dissented. One wanted to, if you go closer to it, divided Fed, everybody's scary. This is going to be a nothing burger, okay? Because it's really not going to affect anything. It's just going to stay the same way forever, just like it was, past month and past meeting as well. So what we do is we go to the Fed Watch tool. We see, has anything really changed? So I went to December of 2026, the full year, basically 83% chance that nothing happens, no cut. And just an 11%. This was as high as 33% chance a hike when things were really, really getting scary, but 5% chance of a cut. Okay, so basically nothing's going to happen for the entire year. Powell leaving, or maybe he's not. He's going to leave. Powell said he's going to leave, but he's going to stay on as a board of directors. Okay, so Warsh comes in. Powell still stays there, giving him the evil eye from the corner, I guess. Okay, so as we can see, the Fed, basically nothing, no change so far for all of 2026. Okay, what about in January? Basically the same. But if we go to January, there's a 20% chance. As long as it's above 2/3 here, this is the majority consensus view, is nothing. Nothing's going to happen because of temporary inflation fears from the war. Okay, so we have the Fed pretty much staying pat and not really doing anything. Okay, but we'll see what Warsh says going forward. Okay, so I think the Fed is going to be a nothing burger for the whole year, especially when the war's over. They're going to be like, boom, you're going to see here, this hikes go to 0, and this maybe go to 25%. Okay, so that's what I think about the Fed. The Fed's decisions are basically nothing, and what we really want to see here is what's making this market move is earnings. Okay, that's the big move. So we got the war is still. We have 3 bombs dropping. The war is still dropping bombs. The Fed, that bomb dropped. It's over. It's going to be a nothing burger. Now we have earnings that get sort of guide us going forward for the next week or so. I think it's very short term. The bigger thing is the war. But let's see the earnings. We had first Amazon. Okay. Where is it trading at? We really don't have the news here. Net sales up 16%. It didn't come out yet. So in Amazon, it's too early. You can see it closed at 263, but aftermarket is trading at 251. So it's down about what, 5%? Okay, so Amazon down. Okay, Google. This should be a good one, right? Yeah, Google. From 347 to 352. Do we have the earnings? Nope, didn't come out yet. Some short-term thing. Google reports 81% jump in profits. That's great. Okay, we don't have the full. Do we have the full events here? 7 minutes ago. Alphabet, 40 billion for Anthropic. TPUs to use Intel. Okay, we have some good news here. Revenue is up 22%. Net income is up 81%. So this is pretty good. However, this move like basically flat. Okay, so far the tech earnings are pretty muted. Google, probably this move was baked in for the past couple of weeks as it was moving higher. Whoever sold options here for the earnings, doing very, very well. There's going to be a huge volatility crush. Google, Microsoft down. Okay, it's trading at Microsoft beat, revenue up 18%, net income up 23%, down. Microsoft is a perennial loser of the group, still in a downtrend. You don't want to buy that, still down. Okay, and the last one, Meta, down. So basically, everyone's down, or Google is probably the big leader holding up. So maybe that'll be some, look, holding up, basically flat. So if you look at the SPY after hours, the SPY is down to 708. It closed at 711. Okay, so the SPY is down to 708. Okay, so you had the earnings disappointing. Maybe that's going to take out some of the air from this market and, you know, maybe bring us down so we can start buying more. Who knows? But so far, the earnings disappointing. Now, it's just now after market, okay? We don't know. Tomorrow, somebody can come in, somebody can see something, and it could be completely reversed. We don't know because I've seen earnings down after hours and then to open up later on the next day. Okay, so we don't really know. Okay, but we do have some trades on the books. We have our Tesla trade still hovering in the middle. We sold the 325 puts and 465 calls. Huge. That was like expected move. So everybody was expecting Tesla to go up on the earnings. It didn't go. So far this trade is looking good. Just to show you guys, we sold a put up here, and we sold. Oops, let's go down. We sold here 325. That's the put. Sorry. My mistake. Let's get rid of this guy. And that's the call. Okay. We sold the call. As you can see, the call, everybody was expecting a move higher. It's very, very much skewed to the upside. Okay. So hopefully this bleeds the premium and we make money on it. And of course, our Intel trade. This is a trade that we initially shorted the 88 call and shorted the 55 put. Okay, it's breaching our call, but what happened was we decided to close this put. Okay, close the put and roll it up to minus 70. Okay, our put was at minus 70, so we had 70, 88, and today I did more. I rolled it up even more, so I collected a credit. Each time I do this, I collect a credit, so it's making my break-even point further and further away. So here I did an 83. So there, to finish it off, now I'm at 83, 88 call, strangle, very, very close. Okay, I will adjust it again if I have to. So far, this whole sequence has netted me $6 in credits. So the worst, my break-even point now is you have to add 6 to the 88. So it's 94. It's trading around 94. So right now I'm at break-even, but this expires in a month. So I don't know. So far, I don't know if it's going to go up or down. Who knows? I might have to adjust it again. But I'll keep you guys up to date on what I do, but so far this has netted me $6 in credits, and the break even is at 94. So we're at 94. I'm at my break even here so far. Okay, so literally the stock has gone from 66 to 95, basically a 50% move in a week, and we are so far breaking even on our trade. So worst case scenario happened. We're trying to manage it so we can at least get a scratch. Okay, maybe a slight profit. Who knows what happens? It could come in. We just know that the semiconductors are really, really hot. Really, really hot. Still up there. I hope they come down, burn some premium, and I'll get out of it at break even. Okay, so that's it, guys. We have one more day until the end of the month. SPY, again, war, the Fed, and earnings don't seem to make one bit of a crack in it. Okay, even after hours now, it's at 709, 710, basically 1 point lower. Okay, so I guess even tech earnings can't really hurt it after hours. We'll see tomorrow. And the war, remember, oil is up 8% and nothing's happening. I guess the narrative that, the U.S. doesn't really care about oil prices because they have an abundance and they're a net exporter in oil, whatever the narrative goes, it's really, really helping them. Okay, so let's see what happens at the end of the month tomorrow. Window dressing, I assume, and on Friday as well. All right, guys, later.